Anthony, thank you so much. This presentation is specifically for you. Appreciate your time as always. I have your book. I actually read it twice. I don't know if you remember. I got this first time we met was in Beverly Hills at a book signing a while ago. And you have a lot of great parallels in your life that were similar to mine. I started under Sandy Weil and Pete Dawkins and Joe Plumeri at age 22, trained about 8,000 salespeople. And I've always positioned myself, Anthony, as ahead of the curve. And I think you and I have talked about it briefly. 96, I started an e-commerce company, took it public in 99. Again, a little too early. It blew up in 2000, but it was the precursor to PayPal and Shopify. So I was one of the first shopping carts in the world we were building, and we were the first master merchant. So I have a tendency to be able to kind of spot trends and move in. 2000, I tried to build a global currency, a thing called a G-Buck, a global business usage currency. We built an exchange platform, again, way too early there. Ended up in Homeland Security, did a big stint in mobile and did fairly well there. Social, 3 or 4 times gone after Mark Zuckerberg. One of our public companies was a little photo sharing app. Moved into Bitcoin 2012. I think when I negotiated, I got Brock on the board for the Bitcoin Foundation when he was running for it. Nobody really knew who he was. And I've known Brock, for 15, 20, over 20 years now. So as we talk, if you remember also 2017, I think 17 or 18, I was in your offices with Ray trying to get you in front of Bitcoin and crypto and understanding where it was. Same thing with Peter Canez from BlackRock. And I know you know Peter. I was with Peter. I'm like, Peter, here's the direction. Here's where it's going. Here's how you get in front of it. And so I tend to like to be in front of industries. And the saying is the early bird gets the worm, but the second mouse gets the cheese. And unfortunately, I've probably been the early bird a few too many times where the second mouse comes in later. This one, I think we got it right, not only because we're not too early, but it's refitting an existing industry. So I'm going to fly through. This is our investor presentation, raising $5 million, private, small, quiet round. I have a lot of options, as you can imagine, of who I take it to. I want to present it directly to you because there's a lot of strategic things that I think we could do together that would be really fun and cool and different than some of the other places I could take it for capital, but would be less strategic and less interesting from a partner standpoint. All right, I'm going to try and jump in here. We're going to do a share screen. I don't normally do it this way, but presentation. I'm not going to wear you out, Anthony, with a PowerPoint presentation. I'm going to go through super fast. If you're interested at all, you can download this later. But I want you to see where I am and how big the industry is and what we're in front of. And it's called Green Wave funding. Sustainable bonds. So there's 2 types of bonds, green bonds and blue bonds. Green bonds are basically land, blue or water. They're big areas of focus. And this is where we've looked to really dive into infrastructure, housing, mobility. The market for sustainable bonds has been going up consistently, but the money allocated, this is where I got really interested. This was 2 years ago at Milken. We were at a panel and there was $10 trillion of money mandated, right? This is the difference between Bitcoin and crypto. I still love Bitcoin and crypto and blockchain, but money doesn't have to go in there, right? You and I have been fighting that battle for a long time. Heavy lift, rowing the boat, regulators. The money doesn't have to go there. Green bonds, it's mandated. There's not only 10, there's over 15 trillion now on its way to probably 100. And I'll show you where those numbers come from. But it's really interesting also, green bonds in terms of traditional bonds is still a very small percentage, right? So $15 trillion of mandated money sounds like a lot. This is a traditional infrastructure, industry, financial play. We're not repurposing and reinventing things. We're just in front of the wave of a new, funding mechanism for sustainability. And the MENA region has a massive, massive, massive growth opportunity. But to do a bond, there's a bunch of different steps. And I won't bore you. If you already know them, great. If not, basically there's a strategy of how the bond gets put together. How do you structure it? How do you get it certified? Can you get it CUSIP registered? Then you get it registered on an exchange and listed, and then the institutions can pick it up. And you have to be qualified 125 or 150 million up to buy it. And at the end, you might put an insurance wrapper around it. So these are all steps that have just sort of been spread out, and there's different people that do different things. What I've done with Greenwave is put it all in one process. So there's strategy, there's services and syndication, and then there's the syndication out for the actual placement of the bond. So what do? We provide strategy. These big companies and countries don't know how to create a blue bond or a green bond because a lot of the underpinnings are different. Once you get the strategy done, then you have all the services. Think of it like going public, right? If you're going to take a company public, you could go try and do it on your own or do it for free. But at some point, you pay for the strategy, then you bring in the financials, and you've got to do the legal audit. You've got to have your PPM. You've got to file your S1s. You've got all of your legal documents. You've got your audits, your financials. There's a cost of underwriting going public. In the bonds, it's the same way. There's this underlayer of services that have to be done. And then there's actual exchange listing and then the syndication. We've built a company where we get paid for strategy and services and a placement syndication fee. And it's been pretty amazing so far. Team I put in place, I can share with you later. Walter, I don't think you've ever met. Igor, my COO. Peter, I believe you know from BlackRock. Stephen Ball, I've introduced you to. Zulfikar, that's how I'm involved in Abu Dhabi with Sheikh Nayan. Kevin Richards at Bermuda. Lars, and I've got about probably 6 former ambassadors. The ambassador, so Gustavo's coming on board with us, who wrote the bond for Seychelles, $680 million bond for Ecuador, Brazil, Venezuela, Ecuador, and Dubai. So some really amazing people are starting to get focused around this. The project sectors for bonds, primarily renewable energy. These are big infrastructure projects, and some of them we've already signed. We've got a smart city out of Arizona, $6 billion bond. It'll be probably over 4.5 years, $500 million initially. We signed a deal with Indonesia. It actually went up. We signed a $5.2 billion bond with Indonesia. We thought $400 million would be the first bond. We think it's about 1.2. The $300 million is done. We have 3 term sheets here. That's going through legal right now. Again, the company model is we get paid to structure the bonds, and then we get placement fees when these bonds are done. And the fees are very nice and interesting. So the back-end revenue is really tremendous and exciting. What we did at the partner level, though, is all of these underlying auditors, right? So legal is an example. We've got partnerships with Latham and Watkins and Safarth and the different legal teams. And then for IP, I needed an intellectual property patent done, and I could have gone to Ocean Tomo and said I went to Ernst & Young and got an IP patent valuation. We have partnerships. So this is a partnership model for the audits, but by bringing in tier 1 service layer and audit layer, by the time we package this bond together and register it, the institutions we're talking to are begging us to bring them big multi-billion dollar, $500 million and up bonds because they have to deploy that capital. And what do I mean by have to? I'm going to switch gears here. Again, if you're sticking with me, this was easier than trying to get you on the phone. I think you can kind of watch this on your own. Here's a couple articles. S&P forecasts $1 trillion in sustainable bonds in 2024. $1 trillion. The RBC, right, the Royal Bank of Canada, as long as this works, Anthony, it'll show you, they committed $500 billion, but so far they've only deployed 29, and their goal is to increase to 35 billion. The problem with RBC and HSBC is they've got $500 billion of capital mandated. They've only deployed 29 billion because there aren't enough qualified green and blue projects. They can come in and access that mandated capital. The position we're in is tremendous. The UAE, if I jump over here, the UAE pledged 270 billion after COP, if you knew that. And then the UAE also talked about the goal. They think it's going to be 100 to 150 trillion dollars of capital needed for the sustainable industry. the UAE wants to fill that gap. I bring the UAE up for a different reason. I'll cover that in a minute. And one of the last things here, in a stunning move, JP Morgan, Chase, BlackRock, I've been saying this for a while. ESG investing, sustainable investing is not sustainable because the returns are not going to be up to par, especially for an institution, pensions, hedge funds that want a fixed instrument. So a bond gives you a 6, 8, 9, 10% fixed rate of return. In these companies, there's $68 trillion of capital that's potentially being pulled out of ESG investing and moved over into what we believe will be fixed instruments and bonds. Let me finish up on the PowerPoint here. Appreciate your time if you've made it this far. Here we're going back into the share screen. So what we have in place is not only this amazing pipeline of huge deals. I think we've got about 28 or $30 billion of bonds we've already signed. I don't have enough people. So we're raising capital for a couple different reasons. Number one, I need to hire more people. So working staff and capital, this is primarily bringing on a few biz dev people that can be in the rooms we're in, like SALT, like FII, like Davos, and source the deals that are 500 million and up. And they're coming to us all the time, Anthony. They're coming to us like crazy. That's a services company. I want to open an exchange in Abu Dhabi for green, and we're working on one in Bermuda for blue. Now, I saw that I sent you the note. You gave up on the license for the Bitcoin ETF side, which I get. Right now, Luxembourg and Singapore are the two primary exchanges for green bonds. And there haven't been that many. I think there's only been 40 blue bonds done in total and about 400 or 500 green. You're talking about, I want us to have a green bond exchange to guarantee the listing of the bonds and have the companies be able to come up where we could line up $1 trillion of first look capital through the UAE. I've got HSBC. We could line up PIF and FOB. You're talking about controlling an exchange, Anthony. They could have trillions of dollars coming through it. This isn't hyperbole. It's not entrepreneurial overspeak. This is the amount of money that's out there that needs to be deployed and hasn't been. And right now, the exchanges in Luxembourg don't provide all the services on the front end for qualification. So the bonds that are getting created around the world still have to qualify for Luxembourg and try and get approved and not get kicked out for greenwashing. I want us to own the whole process. We're working on 680 million right now with PIF on something. We've got 2 billion in Colombia. I can show you the list of projects we're working on. It's astounding. But if we own a listing exchange platform, now we're a fintech. And the last part is I'm going to open a reinsurance company in Bermuda. And we would be the first company in the world I'm aware of that would own 100% of the life cycle for green and blue bonds that right now is $15 trillion of capital on its way to 100. I want to build that and sell it as a fintech platform, and I want you involved more so than the guys I could take it to at BlackRock and JP Morgan. You know, the only person I'm trying to get involved in this that's sort of floating around the edges with me is Bob Diamond. I don't know if you know Bob from Barclays. I want Bob to step in as chairman, but Peter's been helpful. But there's a great spot here, I think, between what you've done with SALT and just your background in New York and some things we could do together. And I promise I wouldn't embarrass you on anything like what happened with FII and Sam. That's another story. So we're raising $5 million. We've already got all kinds of deal flow in place. The goal is to open an exchange in Abu Dhabi and Bermuda, green and blue, and open a reinsurance company, and then actually try to sell the company within probably 18 to 24 months with a massive amount of deal flow and things in place. That's the whole presentation. There's a bunch of stuff back here in the back with appendixes, more data, and actual market size, and some of the articles are here at the end as well. Again, so I wanted to share this with you. When we were at Abu Dhabi, you asked me to send you the information of what I'm working on now. I really thought this was the best way to do it so you could watch it whenever you have time. Try and digest it and let me know your thoughts. I'm going to do a $5 million round, 250,000 bite-sized minimum. I don't want a lot of people in, and we're not running around trying to overhype and over promote this because I want to sneak up on the industry. If we can get the exchanges done and get in front of anybody else owning exchanges in Abu Dhabi and Bermuda and have 20, 25, 30, 40 billion dollars in bond flow already coming on, we will be in a great position. So again, hope you're well. If you've watched all the way through to the end, I appreciate your time, and let's find an opportunity to talk soon. Thanks, Anthony.